do we make of United Rentals right here? Here's a stock that's been on a bit of a roller coaster ride this year, rallying hard in January, then giving up some of its gains in the spring before bouncing back hard over the past month. So what's going on? Okay, for those of you who don't know or remember, United Rentals is the largest equipment rental company on earth. It makes its money renting out machinery to all sorts of construction firms, utilities, industrials, oil and gas companies, home builders, government entities, non-residential construction. It's a terrific business because renting this stuff is so much cheaper than buying it outright. Now, I think a lot of the reason this stock did cool off over the spring has to do with the fact that investors got too excited about a possible Trump infrastructure bill that was never going to make it into law with this Republican Congress that hates spending money. Still, United Rentals is doing really well. Just last week, the company reported an excellent quarter, delivering an 8-cent earnings beat off a $2.29 basis, higher than expected revenue, up 12.4% year-over-year, and management even raised their full-year forecast. Plus, the company recently closed on its acquisition of NES, giving it more exposure to non-residential construction, which you know we like so much here. Nevertheless, the stock hasn't done that much since the company reported, so maybe this is the opportunity. Let's take a closer look with Michael Kneeland. He's the president and CEO of United Rentals to get a better sense of how his company's doing and where it's headed. Mr. Kneeland, welcome back to Mad Money. Good to see you, Mike. How are you?
Have a seat. Jim. Thank you.
Mike, let me ask you something. This, to me, was the inflection quarter. It looks like that after some trending down, you're getting better rents, used equipment, which I've always felt is the leading indicator, getting better. The stock's not up that much that people may have missed it. Do you feel like I do? Is this the fulcrum?
Well, I think, one, we had a great quarter.
Yeah, it was great.
I mean, it was great. The team delivered as they should have. But, yes, I mean, there's a lot of things that are building some momentum. We saw it was very broad. It was across North America, including Canada this time,
right.
That we saw some positive growth. And it was not just the East Coast and West Coast. It was very broad in a lot of different verticals.
Well, let's talk about what NES does for you, because it seems to fill in a nice hole, and it's already doing very well, isn't it?
Oh, it's doing exceptionally well. You know, we've, as you know, we've done over 275 acquisitions. Right. So we know the playbook. We've had our bruises, but we know we have a good playbook, and the team's executed very well. Within 9 days, we had that company on our operating system. And we turned it right around, and we've really been focusing on driving those customers and also the employees. And yeah, we're delivering much sooner than we anticipated on all of the synergies, right. Both from a standpoint of cost synergies and revenue synergies as we build that into 2018.
Well, this is still such a fragmented market. When I hear that, Mike, I got to tell you, I'm actually hoping you do another big one, because you're gaining share as it is. But if we've got the upturn, you got to be all in.
Well, you know, as you know, in our industry right now, you're seeing some of that play out. Yeah. NES was one of our acquisitions, right. But our competitors are doing the same, and they see the same, growth that they see ahead of us.
Now, one of the things I saw, Caterpillar had a great quarter, and that's a great American company, and you certainly have your share of Cat equipment. They said that this country is now driving a lot of things. I mean, you're pretty much mirroring that, right?
There's a lot of activity out there. Yeah. Look, for Caterpillar, it's a great company. As I said, Canada, commodities seem to have risen. Not to the level it was before, but it's much better, and we think it's behind us. Well,
I think it's important for viewers to know why Canada is important for you, because a lot of people, it's an afterthought, but it's not for United Rentals.
No, it's not, because we're a national company. Our customers travel. Right. We're in all 10 Canadian provinces. We're in 49 of the 50 states. To serve that customer base, you have to be there. And that's why Canada is important to us.
Now, a lot of your competitors would seem to be uniquely located in the Sun Belt. What's your advantage over them?
Well, for us, I mean, we have a broad range of products. Right. We have our specialty businesses. Mm-hmm. But again, it's also our footprint. It's bringing in that customer and being able to touch that customer wherever we are in North America.
Okay, now, oil and gas has never been that big a part of your business, but at the same time, it was so bad that it could have sunk a battleship. How's that business doing?
It's doing better. Okay. Obviously, as you see the land rigs improve, our business has improved. The pump business that we acquired 18 months before the oil dip has come back. We posted 37% growth in the last quarter. How
much of your business has to do with companies that are building pipelines?
You know, it's de minimis. It's only about maybe 2 to 3%.
That's the middle market. Give me a sense about whether it's good, because that's what I see under this new deregulation era with FERC approving things. That could be one of those areas that under Trump might have more activity.
Oh, sure, it'll have activity. Not only from the standpoint of the pipeline being under construction, but the infrastructure that it brings around it. You know, the wages, the employment.
Right.
You know, bringing people into those markets. Absolutely.
Do you think that there is kind of an industrial renaissance happening? You know, we had this Foxconn in Wisconsin, but we know, I had Dow Chemical on this morning. They're building like mad in the Southeast. Are we seeing actual plants being built again?
We have been. We do see that. I mean, you know, last year, I think that the industrial sector went to a pause.
Yes, it did.
You know, and now it's coming back. We started seeing it in the fourth quarter and in the first quarter, and it continues into the second quarter.
And explain to people why the used equipment matters.
Well, used equipment is, to your point, it is underlying about the demand that we see in the marketplace. So as used prices hold up and recover, it shows about demand. And you know, we rent equipment, we keep it as long as we possibly can, and then we turn it around and sell it, and we generate a lot of free cash flow.
Last question, on a month-to-month basis, it looks like rents got stronger even in intra-quarter. Is that true?
It did. Every month, our utilization was a record. Every month of the second quarter. So this was a great quarter by all standards.
Yeah, absolutely. And I think that you get momentum, and this is the beginning. This could be inning one of the momentum, is my thinking, Mike.
Yeah, look, we love the momentum. We have to remind, we are a cyclical business, but things are looking pretty good. All
right, thank you so much. Michael, with more caution than I have, which I think is probably right, because it's his business, not mine. Michael Kneeland, President and CEO of United Rentals, URI, a really terrific company. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.